All right, guys, here we go. Real quick video on natural gas futures, how we're going to approach the trade. But first, we're going to hear from Gareth Soloway over at In the Money Stocks and his take on the natural gas futures. But a little disclosure and background information. Way back in the day, we were a member over at In the Money Stocks with Gareth Soloway and Nick Santiago, two good traders, and got a lot from it. Good foundation. But back when we were having to work part-time jobs in order to pay for the membership and the courses and stuff. But anyway, just to show you, you can come from not knowing anything to be able to be competitive with anybody in the markets, calling the markets. Okay, so let's go ahead and get started.
This is the chart of natural gas. You guys know that I am now bullish after talking in these game plans for the last month, waiting patiently for it to come down to this level. I am now bullish. We've seen it chop around a little bit just to look at the levels again for those of you that may be just tuning in on nat gas. We obviously know we had this channel here, this channel trend line, or I shouldn't say channel, but basically a wedge pattern. And then notice again, we broke out. That was awesome. We chopped around and we've now retraced into this level. So I continue to be a buyer here. Granted, I don't go all in. And remember that, guys. This is
Okay, that's a good point. And as you can see here, also there was an M formation where you had a high pivot, a higher high, and then you took out this pivot low there. And then that's how we ended up down at this level. And then also, for a little bit more clarity, let me get rid of all that. We'll show you on this chart here starting at the bottom, we have this long-term uptrend line that's been tagged a number of times, actually going back to middle of April of this year. And a key point here, also we have the 100 simple day moving average, that gold line right here, helping hold and support the price action on natural gas currently. And then on top of that, you have this blue dash line that was previous resistance, as you can see through here. This little high pivot area there, here, and then we finally gapped up over it, retested it, and then came down close to a retest again. And then present day, we're currently also in that location. But we have the uptrend line, this blue dash line of previous resistance, then it became support. And then you have the 100 simple day moving average. And then also you have a time count here that I won't get into. That's for our Patreon members. And then also we closed above that previous day close as well. So we have a number of factors. And whenever you have what we call, two or more factors, and that gives you an 83 to 87% probability that your thesis, whether it's to the upside or downside, is going to hold true. And right now we're looking at, upside projection for the price of natural gas. But let's go back to the video here real quick.
very important. Never do I go all in on an initial buy. I don't care how good the level is. And you want to know why? Because no matter how good the level is, I have seen them fail. And that's just the essence of it. I don't care if it's an 80% success rate level, it still means 2 times out of every 10, you are going to lose on that. So therefore, I cushion myself. Being a defensive investor is the most important thing you can do. Essentially, once you go all in on a position, you basically have handcuffs on. You can't.
Okay, that's not true. For our Patreon members, we have 3 different ways to place your stop loss that absolutely guarantees you will not be wiped out of the market. Okay, that was just an incredible find for myself when we figured that out, and we share that with our members. So that's the first thing. If you know how to place a stop loss, if you know how to, know where your support levels are, so on and so forth, you don't have to worry about all that. And then we'll get to another piece of very important data here in a second.
Can't maneuver. Because I haven't gone all in on this position and I've just started a small position, guess what? If it dumps down here, I can add to that position.
Okay, you never want to add to a losing position. Okay, that's the first thing. What the market is telling you right now, let's go back to my chart. What the market is saying right now is that we have a number of factors here, and we're looking for, a bounce or a short-term rally to begin with, okay? And then if the thesis collapses and the price action moves to the downside, that means all these factors were negated. Nothing that matters, okay? In other words, the market took a 180. Everything that we were counting on in the market is no longer valid, no longer reliable, okay? So why would you add to that when the market is saying, it's no longer, a potential rally or bounce to the upside? And if we do collapse or pull back under this location here, part of, I would say 90+%, probably 100%, but hardly anything is 100% in the market. But anyway, we'll come down to this 200 is what we're looking at for a target if this price here moves to the downside and starts trading. Okay, so let's go back to the video.
And now my dollar cost average is right in the middle here. If it goes down,
and you don't want a dollar cost average, okay? That's the biggest fallacy from Wall Street. You keep adding lower and lower and lower.
down here,
I mean, do
can
you
add
really
again,
know
and now my
where
dollar
it's all
cost
going to
average.
end?
Eventually, you're going to get some sort of bounce.
Okay, you're eventually going to get some sort of bounce. But if we collapse and I'm out at the low of that candle and, we continue to the downside, well, my risk is right, about this much, right in here. And we have this much still to go. I don't know if I want to, risk that much downside. And who knows, I'm pretty sure the 200 is going to hold it and at least get a little bit of a bounce back up. But what if we come down here to this weekly, now it's going to be a monthly, specific measured move this low on the chart, okay? So you never know, once it collapses like that or comes under that many factors, no telling where it could eventually end and then start consolidating and then bounce again. Okay, so that's why we don't believe in dollar cost averaging. That's for guys, that's for investors that can't call the tops, can't call the bottoms, and they don't have a good stop loss methodology. But guys, appreciate you watching. Check us out on Twitter or X. Check out our Patreon members group if you want to learn more about this and be able to up your trading, investing odds and percentages. Come check us out and see what we can do for you. In the meantime, we'll see you on the charts.